Well, I think we have to be careful because I think the days of top-down investing is more or less over. Well, we need to go bottom-up and we need to be selective on the kind of sectors we invest in. Because this rate hike path that the Federal Reserve has actually embarked on is not going to end anytime soon. We do think that it will continue, and by the end of this year, we will see the terminal rate at about 3.25 to 3.5%, and the 10-year yields are likely to top up anywhere around there as well. But that doesn't mean that the Federal Reserve stops hiking, and we do think that they'll continue to hike into next year as well. And so in the second half of next year, the risk of a recession increases quite dramatically because of the whole series of rate hikes that we're coming through at this point in time. So if that's the case, you might want to go bottom up, be invested in the value sector, in the utility stocks, etc., and not be in the growth stocks, and perhaps do not have too much of the technology stocks as well, because these sectors tend to be affected when rates are actually high.
If an investor were to stay on the sidelines and sit this out, potentially what would he miss or she miss?
Yeah, I think based on our data, strategic asset allocation accounts for about 80% of your portfolio returns, right? So if you're trying to set it out, you're trying to time the market and wait for the markets to bottom out before you go in, you might be surprised whether it's negatively or positively because of the fact that you can hardly ever time the market to perfection. So what you want to do is you want to rebalance your portfolio. You want to restructure your portfolio. At this point in time, we do think that fixed income is increasingly becoming more valuable. There's value emerging from that sector itself, especially where the investment grade is concerned on a very short duration basis. Because we do think that we are quite near to the peak, right? If the 10 years is going to pick up at 3.3 to 3.5%, then we are more or less there in that sense. Another sector that we think is very attractive is basically the European AT1s, where the European banks are concerned. And I think you've seen some of the investment grade issuers coming out with AT1s that are yielding at about 8.5% on a yield to call of basically about 2 years, right? With the reset of about 440 basis points above the floater or floating rate. So that means that they are very likely to actually call it back within the next 2 years. So we think that's the kind of thing that you should be getting into at this point. Yeah.
All right. Cal, to your point of stepping out of technology, it is a broad church. So do we really throw the baby out with the bathwater? Yeah. Isn't there a valuation opportunity amongst the China internet names, cybersecurity? That looks compelling, but the chip sector less so.
Yeah. Good point. The tech sector is so broad today that, just talking about the tech sector itself, you will probably miss a lot of the nuances below that. I think we have to distinguish between value tech, growing tech, and non-profitable tech. And I think where the segments are more vulnerable is basically the non-profitable tech or the loss-making tech stocks, and that we strongly advise you should be staying away from. The value tech sector looks interesting because a lot of these companies have a lot of cash on the balance sheets, very little debt. So yes, that we do think that on a short-term basis, it's an opportunity. On the Chinese internet stocks, the consumer discretionary internet stocks, that on a medium-term to longer-term basis is very attractive. But on a short-term basis, it is likely to actually underperform the rest of Asia. And the reason for that is because of the continued lockdowns and which we don't think will ease anytime soon unless we get the NPC over with, the National People's Congress over with. Because you don't want to run the risk of disrupting that Congress.
That's March.
Yeah. No,
right?
Sorry, the one in October.
The Party Congress.
Correct.
Okay.
Party Congress. So you don't want to run the risk of disrupting that, and you want to make sure that there is no risk of any infections breaking out anywhere to actually be spreading into Beijing itself. So you will actually lock it down.
Understood.